In this video, traders, we're going to look at the quarters theory in FX trading. Stay tuned. Hey traders, a very warm welcome to you. Okay, so the quarters theory. Have you heard of the quarters theory? It goes back many years ago, and the idea is a good, solid one. You may find you've been using something very similar without knowing that there's an actual theory behind it. It's similar to the whole number theory, which we'll probably do another video on at some point. But let's run through the quarters theory, what it is and how it can benefit our trading. Okay, so the theory behind this is it's in FX, is that price moves very in a structured manner between 2 points. And those 2 points are 1,000 pips apart. So if we're talking about the yen, let's say it's 100 to 110. If we're talking about euro US dollar, that's going to be 1.35 to 1.36, whatever it may be. Okay, the point is it's 1,000 pip move between low to high, high to low. Doesn't matter the FX pair you're trading, that's just the actual fixed amount. All right, now we go one step further and we break it down into quarters. So each quarter is 250 pips. Okay, so what we're doing is we're basically framing or splitting up, just like I suppose a Fibonacci would do, but into quarters. But we're using that finite area. We're not looking at resistance, we're not looking at support, we're not looking at anything other than the actual whole number price. So a whole number is where the quarter starts. So it could be 100, could be 110, whatever it is. It's that whole number, that 1,000 pip increment where it starts. That's the important point to make here. Okay, now the theory is, and we're going to split it up into fours. The theory is that price will move from one major large quarter to another major large quarter, as the terminology goes, in 250 pip increments steadily between it. So it may mess around and do whatever it wants, but when it's broken through and it's in the next quarter, if it's in a trading condition, the idea is it's going to move again to the next quarter. So it's benchmarking each area you go. And actually, if you stick up, a currency chart, you can start to visualize this. And this is one of the powerful things about this. Can you structure a trade idea from it? Maybe not so much as, hey, it's broken the lower quarter, I'm going to go long. Maybe not. However, you can frame your trade and you can use it as a target. So you can say, hey, you know what? We're chugging along now. We've broken through the next large quarter, 250 pips. I've now bolted in a trading strategy, a breakout strategy, momentum strategy, whatever it may be. I see it within there. My target is going to be the next large quarter, which is going to be another 250 pips higher. I'm going to start to scale some out there and maybe look and see if we're going to reach the major large quarter. And perhaps that might be the final target for your trade. You can very quickly assess a currency pair by looking in which quarter it's in. Now, is that to say it's going to always go from that large quarter to the major large quarter? No, of course not. However, it gives you ability to frame the trade and say, hey, it's in the middle here. We've got some strength. We might well be chugging on to the next major large quarter. We may well pause a little bit at this large quarter here, 250 pip increment. We may well pause a bit, pull down before we carry on. I need to be cautious about just buying blindly in here because we've moved up 2 large quarters in a row. So it's a way of framing your trade. It's a way of, and often, listen guys, I myself always am looking for a reason to hold the trade. I want to be always looking at something that's going to help me hold the trade longer. Why should I stay in this trade? Why should I stay in this trade? To battle the regular thing that comes in and says, take your profits, good profits. I've had this for a couple of weeks now. It's a good profit. You're nearly, where's your target? You've got no target for it. This helps you say, hey, you know what? Look at this chart before. We have often plotted from one quarter to the next, Yes, this is not going to happen in a couple of days, but it is a structured roadmap for the trade. So if you're in the trade and it's plodding on nicely, you're on the end of a trend, why not use this and say to help you stay in the trade? Why not use it and say, hey, we're pushing it on nicely, the chart looks fine, okay, maybe we've got some resistance now. We might have to overcome that. We might be due a few days of unwinding. We might be due a few days of counter trend move. We might be due that. We have to accept that, swing traders. That's part of the game. Nothing's going to go up in a straight line or down a straight line. So once we accept that and say, well, actually, you know what? If it happens, but then we carry on, we're at the first quarter, we've done that, we're actually pushed through, we're starting to consolidate here and pull back here, that's fine. As long as we stay in that second quarter, we broke through the first and the second, or third and fourth, whatever it may be, I'm comfortable. I'm going to stay in the trade, and I'm going to hope and expect, hope's not a great thing in trading, I want to expect that we're going to plod on and we're going to break through the next, and then we can consolidate there, we're going to break through the next. So whilst this isn't probably the most revolutionary thing ever, sometimes the simple things, guys, are a way to frame the trade. And it's kind of the same thing you do if you were trading, crude oil. Even though the quarters theory is very much for FX, crude oil, it's very, very, you've got $10 move. $10 move is quite a significant structured move. And you can break that down into $2.50, $2.50, $2.50, or $5, or even into $1. So very, very interestingly, price does move like that. And when I spotted this quarters theory and doing some research on it, I thought, actually, you know what? This is very often used in other things. Whole numbers in stocks people talk about, $5, $2.50. And FX, it makes perfect sense. We all know that the major numbers are there and people say, oh, Euro's broken 120 or whatever it may be, $100, a yen, whatever it may be. We all know that people are watching those. But also psychologically, maybe subconsciously, traders are watching these quarters as a benchmark. I say it's a quarter of the way there, it's half of the way there, it's 3/4 of the way there. And maybe human nature is that you frame it and you perceive things differently based on where it is relative. I'm just literally guessing here that you perceive things relative to the big key numbers that everyone's always looking at in life, in trading and investing. And maybe subconsciously we're saying, hey, well, actually, it's almost at 110. Do we now believe that it's actually a long because it's going to push up to that level first before it does anything? And it's a self-fulfilling prophecy. Something to think about. Anyway, guys, that's the quarters theory. Let me know your thoughts on that in the comment section below if you've used it, if you find it any good. Other than that, take care. See you later. Keep the risk managed. Goodbye.